What's up, guys? What's up? What's up? What's up? Just want to get a sound check. Quick sound check, and I'm ready to rock. You guys got me loud and clear? Let me know, and then I could switch over and start this. Start the show. Start the show. Got about 5 voicemails. It's going to be a good one tonight. 5 voicemails. Sounds good. Thank you, Mark. Congratulations on the house, bud. Appreciate that. You know, you sharing that information with me, and I clap when people win, so that's awesome, man. Cheers to you. All right. Man. Not going to tell. I can't tell a lie. I can't tell a lie. This one was on the fence. I have not been feeling well. It's such a relief to get sick and banged out for a couple days and not have to worry about it like being COVID, or like I'd almost forgotten what it's like to just get sick, you know, to just get an upper respiratory infection, to just have a cough. Like I totally forgot what that is like. So somebody mentioned last week that I sounded a bit nasally. They were very concerned for me, and I appreciate that. That led to a week of, just a sinus infection and things like that. And Friday couldn't really even talk. Work was tough, but I'm here for the people. Got my Dayquil, soon to be NyQuil. I'm gonna get through this. I really wanted to go live because I have 5 voicemails. I think there was 5, and I didn't want to like get too backlogged because I have a busy week coming up this week. So I know like ahead of time I'm not going to be able to jump on live this week. Some cool things, some subtle flexes on the podcast this week. JJ and I are interviewing. What's up, Steven? Well, thank you so much, bud. This week we are interviewing the Minority Mindset, Jaspreet. Big shot. Over 1 million subs on YouTube. He's going to be on the podcast. So I got him Tuesday, and then Wednesday night we'll be going live. But Wednesday I'm recording for Bigger Pockets. So I'm going to be a guest on Bigger Pockets Money. I am going to poop my pants over that one. I posted on Twitter that it was like I had a couple goals left for this year, and one of them was to be on like a podcast that's bigger than my own. And Mindy Jensen, who's one of the co-hosts of Bigger Pockets, was like, I'll get you on, man. Love to have you on. I was like, shit. So I got that going on, and then heading out of town for yet another wedding this weekend. Just another wedding. Yikes. Hopefully wedding season's over. Hopefully all my friends are now married, and I don't have to worry about this anymore. But some awesome things coming out. I haven't posted like a main video in a long time. I mentioned a couple weeks back that I had some sponsored content that I had to wait to go this, that, and the other way. That's finally going to make it out. I still have some more clips from last week because the questions were that good. So I'm going to clip some more episodes this week onto the main channel. A couple of these, some of them are like short tonight, so they maybe won't make it to clips, but there's a couple other ones that'll make it clips. So that's kind of good news. So there's going to be some more content. Some sponsored content, as well as a video on my new love for the Cash Secure Put. So that's like been one of my new favorite things. And as we go into red, we're going to be needing it more and more and more. So, well, thanks for leaving a voicemail, bud. Full disclosure, I've heard one of them because I almost played it last week. It came in like right as we were ending. But after the whole Ryan debacle last week, I kind of like hearing it live because I don't know if I would have played that voicemail. Actually, no, I still would have played it. But the reaction, like that was the first I was hearing it with you guys. So I'm not sure if that opened a can of worms or not. But so we'll listen to them live together. I'll mention this throughout. I know that comes with a lot of risk. Just know that like you guys are about 5 seconds delayed. So if somebody gets on there with some hate or something that's just completely inappropriate, I should be able to. But I don't know, the kind of the risk versus reward of not hearing it. I like hearing it for the first time with you guys as well. So if there's any questions also in the chat, guys, you saw a couple weeks ago, some great questions came in. I can post that question and make that into a clip as well. I have Robinhood open. I want to talk about how I have some poor man's covered calls that are reaching my threshold. It really hasn't happened where I've had a leaps option that was reaching that threshold where I was thinking about selling to close it. So now that I'm approaching, I have two that are about 100 days out, one of which has earnings coming up. And with earnings, we know raised implied volatility, so I might be in a position to close one of those. I got the poor man's covered call sheet out, so I'm going to show you all my profits and things like that. All right, so I think what do you say? What do you say? Let's get to the first voicemail of the night. They are pretty much they're all options again. I mean, I say this every week as well. I've been getting a ton of hate. I got some criticism at FinCon for, quote, being a personal finance channel that teaches options. I'm here for the people. If that's what you guys are asking. For all the people out there that are unsubbing and hate all the options content, well, ask me a VTSAX question. Ask me about index funds. Ask me about my retirement. Ask me about life insurance. Whatever you want to do. I'm an open book here. Ask me about fatherhood. I don't care. Just the voicemails that come in, they just happen to be all based on options. This first question, I'm sorry if I pronounced your name wrong. Amro, A-M-R-O, came in last week. Let's give a quick listen. I have all my audio set up, so you guys should be able to hear it.
Hey there, Brad. First of all, I just wanted to say I appreciate everything that you do. Your content is incredible. With that being said, I haven't dabbled with options before, and my question is this. Something isn't adding up to me personally. I look at your account, and for example, as you showed, you had 100% returns doing the wheel strategy. However, when I look at the premiums of some of these companies that I would not mind owning, in the case of assignment, premiums are usually nowhere as juicy. So they're usually about 0.5% a week, which is about 24% in a year. Unless, even if it's really close to the current price, and unless obviously it's GameStop or some risky, but I have no idea. How do you make 100% on those? I'm not seeing any of these premiums that it makes the strategy worth it.
I'm a guru.
I mean, the only thing that I could think of, you get assigned, it goes up, and that plays a part. But just rolling, and especially that you also do, you take profit at 75%. You don't even let it play out in its entirety. So how do you get 100% while premiums are, in reality, when I look at them at these big companies, 0.5% at most, or maybe 0.75 in a week? What am I missing here?
Great question. And it's worth mentioning, I admire the hell out of people that ask questions before they do. When he opened up with, I'm not dabbling yet, but I need to know something, that's like music to my ears. If I could hear that every day in my Discord, my life would be so much easier. But I want to clarify a couple of things. First and foremost, let me bring up Robinhood, because if you guys haven't heard or been in the news, it's been a little different. So my 100% that I usually like to, be all over the internet talking about how I'm the greatest. We can see right now, look at about 73%. So 100 was like when I was up here in this kind of neighborhood up here, 103, and I kind of stayed in that position, but we've taken a bit of a tumble. So that's the first thing that I want to say. Like, I'm not saying that like it's always the case, right? We've been on a pretty good run. And I can't even say that the bull run hasn't contributed to it a lot. But there's definitely some other things that I want to follow up with. If I did say this, I'm not calling you a liar. If I did say this, I misspoke. My 100% returns are not from trading the wheel, primarily. My 100% return is from trading options. And a large portion of that does come from leaps options. So once again, let me bring this up next. So if I bring up, we can probably get to this poor man's covered call sheet in a little bit. I definitely want to talk about we could talk about both the wheel and whatnot, but if we look, my average return is somewhere in the neighborhood of 30, right now 36% is what I've had. And with these leaps coming down to about 110 days, like that's, if you figure most of them are 365 days, that means I made 30% in 2/3 of that time. So I have another 30% hypothetically that I can make. So if that makes sense, like it's not just the wheel. So I want to be very, very clear there. My 100% returns, that would be very, very hard for the wheel, but not really. All right. I have said, and I still stand by the fact that I think you can wheel at a 10% return monthly, which would be about 120%. Now, can you do it every month? No. Could you do it for a lifetime? Absolutely not. I think a large portion of my 100% return is a little bit of good timing, a little bit of luck, and I just don't want to confuse, return on investment versus annual return on investment, right? So if I'm making 10% every single month and I say I can replicate that, that's where I'm up in those 100% ranges. So you mentioned that premiums aren't like juicy. Like, I get that. How do we make them juicy, right? How do we drive a premium? We can do that with what? Volatility. We can do that. So volatility, like how volatile a stock is. Is it a meme stock? Is it crazy, or is it a blue chip, like run of the mill? The higher the volatility, the greater the premiums. So that can make something juicy. The other thing that could go up is intrinsic value, the difference in your strike and your share price, right? As the share price goes up, that intrinsic value is going to go up, and that also is going to vary with the share price. It doesn't really drive things crazy. And the other one is theta. How close are we to expiration and how much value are we losing? If we look at like my wheel timeline, my history of the wheel, you'll see some very, very blue chip companies in there, right? You'll see those dividends, but there's also some pretty volatile stocks or stocks that I got during a period of volatility. We talk about Tattoo Chef, pretty volatile. I was getting $200 monthly premiums on that. Now they sell weeklies and they're doing pretty well even now that they're weeklies. Voozy, even though Voozy's been in the crapper, I've had Voozy since December 18th, right? I'm kind of waiting till I get to a year so I can trim some of mine if it stays this low. But there was a time when Voozy would go up to 30, down to 20, up to 29, down to 18, up. There was a couple months of that. And during that time, we raked. We did really, really well with Voozy. AbbVie was in the pharmaceuticals. We weren't sure if they were going to go the vaccine route. So they had some awesome volatility about a year ago. That also helped with that. Dropbox, I messed around with Dropbox and did a couple wheels, and I even did some leaps and poor man's covered call with Dropbox. Right when Corona started, things were a little bit crazy with that. We weren't sure, like, how much are we going to need Dropbox? It had a couple of volatile months. And then even Vail. Like, I haven't talked about Vail in a really long time, but I did really, really well on Vail. So, I mean, I think if we tie all those together, right now we are definitely in a little bit of a downturn. And even before this little downturn, I would say, if anything, we were trading pretty flat in the markets. Volatility has definitely gone down, in my opinion. Are there still stocks out there that are pretty, quote, juicy and paying good premiums? Yeah. And I don't know them all, which is like the power of the Discord. People talking about things. And right now, people are doing really, really well on selling cash secure puts if you know, like, what stocks to do that with. And that's I got a video coming out about the cash secure put and why I'm really starting to love them. I wouldn't look at my 100% returns. I thank you for asking for the validation and kind of fact checking that, but I don't think there's one thing that I can really put my finger on. I would say that I probably did about 50% in Paul Man's covered calls and covered calls on the wheel, and I probably did another 50, 60% in growth in those leaps options as well. So it's not all the wheel. to get 100% in the wheel, you got to really be doing a lot of things right for a really, really long time. And I don't think that I could ever sustain. I don't want you ever to think that I plan on sustaining a 100% return. If I did, I would be the hedge fund manager of the year. I would be making investments in ETFs, and people would think I was godly. And I'm far from that. I'm just trying to make a little bit. If I can really realistically get myself, 8 to 10% a month, and then know that I'm probably going to have some down months. I'm going to have some slow months. I'm going to go to the summer. I'm going to sell weeklies, things like that. I think that's definitely more realistic. See any questions in the chat? Yeah. Sean, what are we drinking right now? Water, because I don't really feel that good, and I'm definitely going to hit the NyQuil. So I'm not trying to hit that NyQuil on any drinks. To be honest, I haven't drank since I've been back from Austin because I wasn't feeling good. So I actually haven't. I don't know if this means I got a problem, but this is probably the longest I've gone without drinking alcohol. I'm probably on like 9 or 10 days. Yikes! Because usually I'll drink it during the week on the podcast, which I was okay to do, but we had Allie and Josh from the FI couple, and I wasn't gonna be like drooling on myself with guests, co-hosts. So JJ, I don't care. I'll tie one on, but I didn't with them, so I stayed sober for that. And if there's not really an event, I don't like sit on my couch and just get after it. So yeah, Sean, unfortunately, water today. I'm not gonna lie, I feel pretty good. The sobriety thing, it doesn't suck. I mean, it's slightly more boring, but it's. C19 from Colorado. Colorado's getting in that weird time of the year where it's like 22 degrees one day and 80 degrees the next day. And then there's 4 feet of snow, and then it's 35 degrees above freezing, and it's all this, that, and the other thing. We got Las Vegas in the house. What's up? Vegas. Mark's in Vegas. I don't think I'm ever allowed to come back to Vegas. Thoughts on Zoom as a teacher and investor? That's a really, really good question. So I'm not bullish on it, to be honest. I personally am not allowed to use Zoom in my school. When COVID first happened, before COVID, I was allowed to use Zoom. I've used Zoom forever. I use it for my tutoring. I love the platform, but there's a lot of politics when it comes into these schools and these big computer programs that they buy. My school is a Google Suite school. So that means Google Teams, Google Meets, Google Classroom, Canvas, things like that for all the teachers out there. So when COVID first happened and we knew we had to go virtual, I had to change my platform. I wasn't allowed to use them because they didn't have their privacy in line with schools and big functions like that. And they had people trolling and coming in because there was privacy things and you couldn't lock meets. So they went through a little bit of a mess. And so I had to use Google primarily for that. And throughout that time, I tolerated Google Meets. They kind of suck. And especially like Zoom had features that I wish Google Meet had. They tried to make some changes, but I don't think as a teacher this year, I'm not teaching virtually at all. All my kids are back in school 100%. And this is in New York, which I don't even think our governor, if you're out there in California, you feel the same way as me. I don't even think the governor wants schools anymore. I think my governor is like, you know what, teachers, we'll figure out a way that nobody can come back to work. They've already done that with healthcare workers, right? So they're not giving us virtual options right now. And I think we're going to see more of that. Many, many studies were done to show that last year and the year before that, virtual learning, although it was a Band-Aid, it was bad and detrimental to students' learning. And I agree 100%. So I don't see that virtual need ever again, really, because I feel like if we do have to go back to that virtual, these bigger companies are going to get on board. I don't see like players like Google ever like fizzling out. They're good for schools. They're big programs, easy to purchase, great privacy. So I like Zoom as the old Tesla analogy. I love Teslas. I hate the company. I love the platform of Zoom. It's what JJ and I use when we live stream. I personally, I'm not bullish on the company. I think their best bet is if they get acquired by somebody, and at first I think a lot of the people investing in Zoom, I think, you could see somebody acquiring them and using their infrastructure to help build it. I mean, if Zuckerberg wasn't so like narcissistic, he would have opened his eyes and been like, every single time they try and do video sharing or whatever, it's garbage. If somebody like Facebook would have bought up Zoom, it would have been like, So, Luciano, no problem, buddy. As long as I can talk, I'll be here. As long as I can talk, I'll be here. If you have a small account of 3K and you got a cash secure put at a strike of $30 and the stock ends up at 25, you don't want to sell covered call below 30. What do you do? Wait and pray. Thank you. Yeah, if you have to bag hold a cash secure put, your options are to YOLO and risk it and write the call below your strike or wait. I can't bring it up because, as I've mentioned in the past, the stuff on JJ and I's portfolio, I can't show it to you guys, but you guys trust me on the numbers. Hold on, let me just log into this real quick. I'll give you an example. Because it's currently happening to me. I'm bag holding Vuzi right now inside my Fidelity account. So right now I have a Vuzi. I have 100 shares of Vuzi at a cost basis of $16.10. What's it currently trading for? Probably like $10. So if I was to try and write a covered call at $17, I would get $1 premium, and they're monthly. So it's just better off. I'm just bag holding those 100 shares right now. The same with Tattoo Chef. Tattoo Chef's actually come back a little bit. I have 100 shares of Tattoo Chef at $19.39. Their weekly option has actually helped me because I can like chip away a little bit and I don't have to wait the month like I do with Vuzi. But yeah, if you get smoked, if the current share price is $25, depending on what the stock is and the volume, you should be able to still get a little bit of premium for the $30 strike if you want to write that call. But like if it keeps going down, you have two options really. You have three. You can write the call, whether that's risking it or at the strike. You can wait for the share price to come up on like a nice green day because you're going to want to wait for a green day to write that call anyway. So you can wait for the green day, write the call, or you can write another CSP and lower your cost basis. You can lower I know you said you only had 3K, but if you had like another 2K sitting around, you could put in there, you can write another CSP at the 2K at the $20 strike for 2K. And if you get signed on that, you lower your basis, but then you start to get yourself into like a little bit of a rabbit hole of, how low do you want to go before you're like, damn it, I got to get back up. So I don't know. That's really, really up to you guys. What are your thoughts on using the straddle? I don't use straddles and strangles. To be honest, if I try to remember I know the straddle is what the same exact strike a call and a put. And then what a strangle is you separate the strikes. It's a call and a put, but you separate strikes. I'm not into them. I know why people do them. But then let me give you a little something quick too on those types of things. And this even goes with spreads. When I first learned about spreads, I got excited because everybody was saying you could do them with a small portfolio. You don't need a ton of cash to do it. And I was like, shit, that's me. That's awesome. But then as I've done it, I've learned that there's a reason for that. You don't need a lot of cash to do it because they'll collect the crumbs. Like the probability of profit is so low. So many things have to go right. It's almost worth like not doing it, in my opinion, and saving up cash and starting with the wheel. I'm just not a huge fan of spreads. But Brad, the poor man's covered call is a debit spread. Yes, it is. But I don't write it as one option, right? I don't write it as the spread. I buy the leaps, and then when the time is right, I write the call. So have I done spreads? Yes. Have I done strangles? I've done strangles. I've never done a straddle. And most of the time I lost, just if I'm being honest. So those are my thoughts. Do you and JJ plan on doing an update on the challenge? I always want to, but he's getting lit. So, I could give you a little update right now because I think it's hilarious. So, I'm not sure that JJ is winning on any of his positions. If I can be honest, he is bag holding the shit out of Baba. Right now, he has 144. Or no, how many shares of this does he have? He has 25 shares of Baba at 193.45. He's down 25% in that position. He's down $1,200. He has out of the money Baba calls that he's down 54%. That's minus 327. Yeah, he has a Wish. He has 100 shares of Wish. That's down 44%. So 422. He's down $422 there. It's not going good. But to be honest, like this is where like the give and take of like a YOLO investor like him. He's not a YOLOer, but with extra money, he tends to be a little more risky. Where with my extra money, I still tend to be super boring. We started with 40,000, as you know. We currently have $39,101.77. So we're down $900 with JJ being down almost 3,000. So it's like, it's a give and take. It could have went either way. If JJ was right, the portfolio would be soaring because he would have been right. Since he wasn't, my strategy was right, and I'm pretty much cleaning up all the blood, but I'm keeping it at least at an even keel. And this can go the same way inside your own portfolio. This is why I have a large majority of my net worth based in index funds. This portfolio screenshot is a perfect example of that. When things don't go your right way with your speculative investments, you don't get smacked as hard as it looks. Right? We have a foundation. Like right now I have 1, 2, 3, I have 5 puts out. I have 5 puts that are all green, all doing really, really well, all with more than 18% ROIs and more than 50% annual return on investments. So like those things are keeping us afloat. Now, am I knocking JJ? No, I signed off on those. Like we're not like doing this behind each other's back. I'm not saying JJ is a donkey. I'm saying we had 2 different philosophies. He's like, yo, I'm going to try and go for it. And I was like, okay, you swing as hard as you can. I bat next and I like to bunt, So that's kind of why it's been fun. But right now we're down about $900. And we've probably had it for 6 months or so. I don't even know if it's been that long. But we are thinking about like getting that back to even and getting it out. Because the real estate market is definitely starting to plateau out. It's getting to a point where we think that we might need that money a little bit more. When we started this, we were saying, the real estate market is just stupid inflated. So now that it's starting to come down a little bit, I think there's a pretty good shot that we're going to wrap this up and get out of it. But we didn't do well. We'll at least break even. I mean, when I close my puts, and then even if Baba comes back like 2%, we'll be good to go. Tattoo Chef, I'm down. It's not all just him. I'm down $89 on Tattoo Chef, and I'm down $363 on Vuzi. So I'm down too. But my calls and my puts, they're at least keeping us close to just complete and utter disaster. Frank, I would have to agree with you, but I can't speak about it out of respect for my profession and the place that I work. What I can say is that the educational system is the only like state run, federal run. I don't want to say it, but like I joke with my friends that like police, firemen, the library, schools, they're kind of like socialist things, right? Our taxes pay for them and everyone gets them. School's the only thing that hasn't changed in hundreds of years. The fire department's changed in their equipment. The police department's changed in their equipment. Even the freaking library has computers now. School, same thing. Take these subjects, sit for this amount of time. Oh, but there's been studies that, the adolescent mind can only focus for 14 minutes at a time. Yeah, no, 50-minute periods sound great, which is why I'm a very, very big advocate for homeschool. And if I can make it happen, that's probably going to be the direction I go. The kids are zombies. They are. I'm also in a very, very high pressure school. So I'd like to think that in non-pressure schools and maybe some other places where every single kid isn't trying to go Ivy League like my school, I hope it's better, but it's a little broken. I think it's going to change. I think it'll be forced to change, especially with, I mean, in my class, I have 60 something students. Half of them are making money on the internet. Half of them, so there's only so long before that catches on. I have students that are making more money than me. And I'm freaking trying to get them to hand in a acceleration of a bowling ball down a ramp lab. And they're looking at me like, Finn, dude, can I just step out? I got a freaking call. And I'm like, yeah, because I get it, but it is what it is. Carlos, what's up, buddy? How are you? Tattoo Chef cost base is $19.25. Yeah. if I'm gonna say it, I have more faith these days in Tattoo Chef than Vuzi. I think what the Vuzi's also dealing with the supply chain issue. Everyone asks me all the time, like, why haven't I got out of Vuzi yet? And we actually talked about this on the Zoom call the other day inside the Discord. They were, a lot of their hype was based around a new product that they were going to release that they didn't get to release. So that's a big deal. A cricket just came in my room. So that's a big deal. And I think I really want to see what happens with it. Yeah. Thoughts on Palantir? No thoughts. I know it's hypey. I know a lot of people love it. I know a lot of people are bullish on it. I just haven't, given it the time of day yet to care. I only own 11 stocks. So when people ask me about Palantir and things like that, I'll bring it up. I own 11 stocks. If I add a 12th, excuse me. If I add a 12th, it's not going to be from a company like Palantir, right? It's not going to be. I don't even think I'm going to add it. If anything, I'm trying to eliminate some of my stocks. But if I am going to add one, it's not going to be Palantir. Here's my current M1 Finance, my long-term con. It's got $20,044 in it. So all time, does it give you the values? Oh, no, it does. Up 2%. But my holdings, my 11 stocks that I hold, Tesla, PayPal, Tattoo Chef, Visa, NVIDIA, Vuzi, Google, Starbucks, MasterCard, Facebook. Yes, I did mention that I do hate Tesla as a company. But look, but I can't get rid of it just yet. So I do. I'm not adding to any of these positions currently. Pretty much just adding to VOO and VUG. And to be honest, the older I get and the more money I make, that's probably just going to go right still to index funds. Because to be honest, the reason I'm not adding more stocks, I had these stocks and I'm kind of waiting for them to be long-term gains. Once they're long-term gains, I'm probably going to get rid of them. But when I was buying stocks, I didn't know about Leaps options. I didn't know really about other ways to make money besides the wheel. So those will get sold off, and they're not going to go to index funds because I want to keep a little bit of spec play. I like the excitement. But I'm going to sell off stocks. I'm going to trade more options. That's what's going to happen. I'm just waiting for long-term capital gains. There's no rush for me to get into more Leaps and like sell these off for short-term cap gains when I could just be patient. Most of them I've had almost a year. I'll just wait the year, sell them off as I get them, throw them in Robinhood, and just start trading more options. Honest Life asks, if all you had now is $10K to your name, how would you allocate it? 50% long-term. Now, if I only had $10K to my name, it would go in a checking account. I would live off that shit. If I had to invest it, if all I had was 10, you'd have to tell me like, well, 10 grand to my name, 6,000 of it's going into VTSAX into my Roth IRA. And then the other 3,000 is going into VTI. And then the other 1,000 I'd trade options with. I'm a 90% index funds, 10% YOLO. That's when you see things that are not index funds, you can pretty much assume. Let's see what I got here. Let me see if that even makes sense. So in here I have 4,000 in stocks. Then I have 4,000 in stocks in here. I have how much in Robinhood? I got 11,000. That's 15,000. Then I got a lot in Bitcoin. I'm probably not 90-10. I probably have more than 10% in spec plays right now. But I mean, if all I had was 10 grand, man, there's so many things I want to say about that. If all I had was 10 grand, I'd be using that 10 grand to make more money because 10 grand is nothing. I would be investing in a side hustle if I only had 10 grand. I don't know. 10 grand to invest? That's different. 10 grand. But then again, I have 10 grand to invest all the time. Just follow the channel. I'm pretty open about where I put my money. My question, Marlon asked, my question is, what if, I love when there's a capital if. What if instead of buying a deep in the money leaps, I want to buy an at the money leaps? Can I still sell weekly covered calls against it? Absolutely. Yeah. Yeah. But just remember that the goal is for the leaps to make you a shit ton of money. That's the goal. So if you want to sell at the money to get a lower premium, to pay a lower premium, I get that. But you get what you pay for. So with that lower premium paid comes a much, much higher likelihood that you lose that premium. So would you rather, this would be like the example, would you rather pay $250 and have an 80% chance that you don't get that money back? Or would you rather pay $1,000 and have a 10% chance that you don't get that money back? I don't know what that answer is for you, but that's why I buy deep in the money. Because for me, I'd rather pay more money for the higher likelihood of getting it all back. I don't need the discount. If you need the discount, you probably should pick a different stock. I'm just being honest with you. You know, now, do I not sell out of the money calls from time to time? I do, but not for the purpose of the poor man's covered call. But like maybe you know something I don't know. There's nothing wrong with out of the money leaps options. If it's trading for $22 and you're like, okay, I think it's going to go up 10%, go for it. There's nothing wrong with it. I'm not going to call you a donkey. I'm not going to shake my head and say, no. The reason that I go so far in the money is to give myself a higher likelihood to succeed. That's it. I'm trying to mitigate risk. For the same reason I put my seatbelt on. Can I still get wrecked? Yeah, but let's minimize some risk. So by me putting my seatbelt on, it's the same as me going deep in the money. This damn cricket. I don't know if you can hear this cricket. This cricket is like on my shoulder. It's fall. You're supposed to die. Carlos, are you planning on staying with Robinhood after the latest news? Is there more news on Robinhood? Every day. Let me guess. They colluded. Yes. Until Robinhood sends me an email that says, we have broken so many laws that we have to shut down. You better get all your money out before you lose it. And that would be anything that's over $250,000 that isn't insured by the SEC. I'm going to stay. I got 10 grand in there. Like, I posted that video, like why I have to sell from last week. The amount of comments I got from people like, well, it cost me $11 to get into a trade and $11 to get out of a trade, so it's not worth it for me. Like, if you're still paying $11 to get in and out of trades, you need a new brokerage. Yeah, I said it. I mean, even like Fidelity and Vanguard was 65 cents to open and close. You're paying, I don't get it. And I ask them in the comments, I'm like, what's the deal? Like, why is it worth $22 to open and close a trade? What is that brokerage? Are you getting flight miles? Are they buying you dinner? I don't understand why you'd have a brokerage. I mean, maybe some people did say like the international, this, that, and the other thing. Let me do this, that, and the other thing. Okay. But I wouldn't be trading options in there. Same reason I don't trade options in my Vanguard account. I trade options on Robinhood. Oh, but the bid-ask spread and my thing doesn't get filled. I mean, you find what you want to find. If you want to hate Robinhood and complain about them, you could probably dive deep and find a bunch of shit. Probably could. Me? I don't know. What's the latest news? Tell me what they did now. How did they screw people over? All the people that they screwed over that don't know how to read terms and conditions. I would love to hear that. I got to go Google that. At the money, you should buy shares instead? Maybe. Not really. Let real estate pull back. Don't buy because it has flattened the sellers of the market. I don't think foreclosures are going to happen for a while. I don't think so. Jeffrey, I mentioned the first rule about the Discord Zoom call is you are not allowed to talk about the Discord Zoom call. And the only reason why we're talking about the Discord Zoom call is because I'm going to open it up soon. We've had a couple people that have left the Zoom call for personal reasons. Not like all at once. Like it's slowly dwindled down, and it's been like the same 5 of us, and we're like, should we get some more people in here? Because we kind of know each other, right? I won't mention who's in the Zoom call. You have to kind of find out. But no, the Zoom calls, the reason why we're trying to figure out, we might change the day. We do it Friday happy hour, but it's hard for people, especially on the West Coast. So for happy hours, 4 o'clock, 5 o'clock, these guys on the West Coast are like 1 o'clock in the afternoon. They're at work. Fridays, somebody's always got a wedding, or it's hard for people to go. So we're trying to think of a night. Probably going to do it during the week sometime. But like I mentioned, I'm super busy, but stay tuned in the Discord. You'll find out about the Zoom call. Your videos have been the easiest to understand. I've watched them. Thank you so much. I appreciate it. That really means. Honestly, I've been meaning $100K to invest. Yeah, Roth IRA. My investment strategies are always going to be the same. Max out your Roth IRA first, then max out your 401K, 457 or 403B, and then save for a real estate property, and then put the rest into the brokerage account. That video still gets views. I think I still have it up there. Like why I don't have a brokerage account. A couple years back, I made a video about why I don't have a brokerage account. Now I get comments like, oh, I saw your video. You have a brokerage account. I'm like, you didn't watch the freaking video. I talked about all the things I need to check off before I got a brokerage account. I've checked all those boxes. Get out of my face. Trolls. Robin says, I have a car loan that I'm stuck in. I'll keep reading. Can't afford to pay much more than the regular payment. Interest is stupid high due to terrible credit when I bought it. It's better now. Robin, you know what I'm going to say. I don't think you should be investing outside of retirement accounts if you have debt. I sold off $20,000 worth of stocks to pay off my truck. And I've posted this many times on my Instagram. It took me, 3 months to make that back. And I was at 4% interest. I'm not judging. I'm just saying that debt is the greatest way to slow down your journey to financial freedom. Consumer debt. Do I know people that know how to leverage debt? Yeah, hell yeah. Do I leverage debt? Hell yeah. Properties, I'll never have consumer debt ever again. I really won't. It's just, I'm in the business of having people pay me. I'm not in the business of paying other people. It's as simple as that. I really am. When I paid my truck payment to Toyota, I just thought of like some little sniveling little man that's collecting my interest and going, couldn't save up for a couple months? Thank you. You know? Couldn't go out to eat once or twice less a month? Thank you. That motivated me to pay off my debt. And when I paid off my last truck payment, I put it in the mailbox and I wanted to write like a little letter, like, dear sniveling man that thought you were getting interest from me this month. Suck it. I'm going out to dinner, bitch. That's just me. My financial success is 90% based on the fact that I have no consumer debt. Thank you so much, Frank. That's really kind. Thank you. I can get something newer. I get some newer at a better interest rate now, rolling the existing loan. Thoughts? Nope. Pay off your debt. That's my only thought. Pay off the debt. Pay off the debt. Save up for a new car. That's it. Credit's only good if you're going to get great credit cards and pay them off every Wednesday. And have an 826 credit score like your boy. Flex. Yo, Trevor Hassel Investing and Personal Finance. My new favorite band, bud. Yo, plug the band quick. If you're into mean, I want to break something music, I just found out that Trevor Hassel shreds on the electric guitar. Now you know it exists, bud. Now you know. Trevor's been a guest on the show. You did a voicemail. Trevor was like one of our first voicemails. Was first jumped on the YouTube scene, and everyone said he was J.J. Buckner's doppelganger. Got to have a couple beers. Actually, we had more than a couple beers over there at FinCon. Thank you. It was a good time. And also just blowing minds with the back end of his business. I can't afford him, but when I can, that maybe when I get to 100K subs, I'll be on his level. I'm not on his level. Thank you for stopping in, Trevor. I really, really appreciate it. Mark said, what about the margin loan with M1? I have talked about it. I would think about it. But then again, I would never have the money in M1 to take the margin loan out if I wasn't debt free. Steven said, I can't find good videos on Gamma and Vega. There is a voicemail. And, or somebody told me they were gonna leave a voicemail about Gamma and Vega. We could talk about them. Let me just get through the videos because somebody said, hey, can I ask a Greeks question? And I said, yeah, leave it in a voicemail. So, Steven, if you got a little bit, or come back and check the clips, I assume that we're going to have one on Gamma and Vega coming up in a minute. Couldn't save up for a few months? Oh, my gosh. Trevor is so good at the guitar. And on his YouTube channel, it's a shame. Like, the band's YouTube channel has, like, there's like views. I went to watch all the videos, Trevor, and it's like he's on the guitar, like even my daughter's like, "Oh my gosh, Dad, he's good." I'm like, "Do you like the music?" She's like, "No, but he's good." I stopped adding all my brokerage accounts before I found you. Well, get all the money out of your brokerage accounts. All right, let's get to another voicemail because I know I have a bunch. Let's do this one. Let's see what this one is. Who do we got? We got Harry. What's up, Harry? Let's do a quick voicemail, bud. It's loading. Oh, I know it's when it has to load. That means I've got another one. I did. Yeah, sick. Okay, here's Harry.
Barry, what's up, man? It's Harry from Oregon.
You. I see what you did there. I see. If this was like, what was that? It's not A Bronx Tale. Is it Goodfellas? When he says, I amuse you? Like I'm funny? Like I don't get it. And he's like, you motherfucker, you. Anyway, sorry. I see what you did there, Harry. Or should I call you Henry?
Barry, what's up, man? It's Harry from Oregon. Wanted to say thank you. You're the reason why I'm trading options now. There's a lot of options jackholes on YouTube, but I found your teaching style easy to follow and to understand. Kudos to you, my friend. My absolute new favorite activity is to roll the shit out of my options. It's easy money. Anyway, I do have one question though. When rolling a call option with an upcoming dividend, do you roll a few weeks past the ex-dividend date, or do you buy to close before writing a new call to ensure you receive the dividend? Keep doing what you're doing. You're my new favorite channel. And F that JJ guy and his rental property sewer problems. Just kidding. He's okay, I guess. Take care, buddy.
He is okay. Well, thank you so much. I like rolling options too, and there's been some talks about ex-dividend dates and what we should do. So I'm actually really, really glad we got this question. Let's talk about how are we going to manage these things during ex-dividend dates and when ex-dividend dates are coming up. Have I sold during this time? Like, have I sold in the money? Yeah. Okay. As simple as this. If you have the stocks at the time of ex-dividend, you are going to get that dividend. If you do not, you don't get it. Okay. So if I'm going to get technical, and maybe I can bring the whiteboard up for this, if you are going to have a dividend payout that is more than extrinsic value, you're probably going to get a sign. Let me bring the whiteboard up. Hold on a second. If I can write this down, you'll understand it a lot more. Hold on a second. Because that's really the only time you really need to worry about it. I don't even have, oh shit. I'm like, oh, let me just plug the whiteboard in that I don't have plugged in. I'm a jackwagon. Let's see if this works. Sorry for the delay. Let's plug this in. I went down to like right on it, and I was like, oh gosh. Is this going to work? Yeah, boy. All right. So here we go. So let's think about this. You only have to worry about X dividends if there is an intrinsic value thing. So let me give you an example. So let's say you bought a right now the value. Okay, the premium is like 95 cents. Okay? We really know that that's going to be $95. Now, this is broken into intrinsic value and it's broken into extrinsic value. This right here is what you need to worry about when it comes to X dividend dates. Okay? If this right here is going to be greater than the dividend, you don't really need to worry about getting assigned, because we know when you exercise an option early, you burn extrinsic value. Okay. Now, how do we calculate this? How can we do it quickly? It's not that hard. Okay. So let's say the share price is like $33.20. Okay. And the strike price is $32.50. To calculate intrinsic value, it's very, very simple. It's just going to be the difference of those two, right? So that's 70 cents. This right here, intrinsic value, is just the difference between the share price and the strike price. Everything else is extrinsic value, which is built upon, the time to decay, all right, and implied volatility, the two of those things working together. So if I look, I have $95 of value, but 70 of it is intrinsic value. That means I have 25 cents or $25 per share that is in extrinsic value. So what that means is if the X dividend date's coming up, right? So you have yourself a call. You have sold a call, and the dividend upcoming is going to be 33 cents per share. Okay? You're going to lose this option because they don't care that they're going to set this on fire, because they are going to get 33 for owning it, but they're going to lose 25. They don't care about that. So you're going to get assigned early. You're going to lose that. You're going to lose that option. If the dividend was not 33, it was only 22 cents, there's a pretty good chance you're not going to, and you're going to be safe. All right. That's really all you need to think about when it comes to intrinsic. I mean, when it comes to X dividend dates and when you hold calls, right? It's all about what's left here. But now we know that it fluctuates every single day. So it's not like you can write the call on Monday and know what all three of these numbers are going to be on the X dividend date, which is like going to be Tuesday or Wednesday or whatever. It's hard to tell. Okay. Now, if this thing right now is, if the share price is skyrocketing and intrinsic value is super high, right, and we're approaching expiration, and as we approach expiration, EV gets really, really small, then you're good to go. But I mean, to be honest, if I was going to roll, I would probably just avoid it. I wouldn't care too much. I wouldn't really focus that much on the X dividend date. There's a very, very small likelihood. It really depends on what premium you're going to get. And it's not that I tend to avoid them. So like we talked last week, that might be a situation where I hold till expiration. I don't know. Hard to say. But that's the metric. If you're worried about what metric do I need to think about, that right there is the metric that you need to think about. You need to think about, is the dividend, the price that they are going to get per share, greater or less than the extrinsic value of the option on that day? So if it's something with a small dividend, and you're going to get 6 cents per share, there's a pretty good likelihood that you're not going to get assigned. But when we used to wheel AT&T, that had a 7%, and they were giving a lot of money, that per share price was always pretty close to extrinsic value. So we always avoided writing options with AT&T around ex-dividend date times. I hope that answers your question. Do you have a playlist where this video will see? It's always it's going to be public always after. Hey Brad, are Average Money podcasts going to be live streamed anymore? Yep, they're going to be live streamed, most likely to the Discord members. We've both gotten ourselves in a little bit of trouble with them being live. Now that we're a couple weeks into school, my students know about it. I just don't need that heat. We're going to post clips that are going to go live, but the Discord members, they're going to get access to the link. They're going to be in the chat, and they'll have access to all the archives. Frankly, just to protect ourselves. I know people are going to be upset about that. Sorry, but my teaching career pays me a lot of money. And if we're going to continue to be all loosey-goosey, willy-nilly, and say some of the things we say on there, I have to be able to monitor who's inside there. So, yeah, there's going to be live streams every Wednesday. They're just going to be offered to our Discord members. Would you say for an account of 10 grand or less, it's better off to buy leaps and maybe close them if profitable in a couple weeks and then repeat instead of doing the wheel? It's really up to you. I mean, the debit spreads are definitely going to be a better option. When I've made leaps and poor man's covered call videos, they've always had something in the title, something to do with like doing it with a small portfolio. The reason I don't really wheel anymore is because I don't want to buy 100 shares of things. And if I'm, and also I'm not a dividend investor anymore. Like that's not my focus right now. So the only reason why I could see wanting to wheel is because you want to write calls and you want to hold those shares and you want to get a dividend. But if it's not a dividend paying stock, I made the video. Like I'll never buy 100 shares outright again. There's no reason to. You get the same amount of leverage with the leaps. And you get to choose the strike. It just, I don't know. It just doesn't make any sense to me. So if you have a small portfolio and it's not a dividend stock you're looking at, I personally am always going to try and go the leaps route. It's too expensive to buy 100 shares of a good company, in my opinion. That's just the way I feel about that. Let's get to another Let's get to another one of these. Jonathan coming back for another one. Thanks for multiple voicemail questions, but I appreciate it.
All right, Brian, it's your boy. Back at it again with another question. Round 2. Let's go. Ding, ding, ding. Okay, so when selling calls or puts, perhaps in the wheel strategy, why is it a bad idea to sell calls or puts that are already in the money? I haven't done the math on it, so maybe that's the simple explanation. But it seems as though if the wheel strategy is intended to make a lot of cash, you should sell calls and puts that have higher premiums. Again, I haven't done the math on it, so maybe the answer is just as simple as that, but I'd love to hear your explanation. Awesome. Thanks, Brian. Bye.
Let's get the technicalities out of the way. The goal of the wheel is to mitigate loss. It's to make a little bit of money when the share price of the stock that you're owning isn't doing the thing that you want it to do. And I've said it before, and I still believe strongly that premium should be the last thing that you think about when you do the wheel, right? There should be a list of things that you check off, and premium should pretty much be the last one because these are still stocks that we're going to own in our portfolio. If you're going to YOLO at stuff and you want to look for premium, buy options out of the money and YOLO it. But the wheel is conservative by nature. So it's going to be these long stocks that we want to hold for a really, really long time. So I look at the type of company, I look at their value, I look at the dividend they're paying, I look at their current price, I look at my basis. Then after all those things work out, then I look at premium. So there's that. When it comes to selling out of the money, I wouldn't even say it's a bad idea. I've done it. I do it regularly, and I'll give you the reasons why I might do that. I'm not opposed to it, all right? But generally, this is going to happen in the later stages of the evolution of a wheel, because as I'm about to mention, there's a couple things that are like kind of requirements for me if I'm going to write the call. I mean, if I'm going to sell out of the money. Sorry, guys, my throat is killing me. One reason I might go out of the money with the call, we'll do the call first and then we'll do the put. The one time I might want to do this is if I'm like done with the stock, I want out of the wheel. So let's say, for example, my basis on this thing, I've been wheeling the stock for a year, and my cost basis is somewhere in the neighborhood of $20. This thing's traded for like $35, right? It's trading for a lot. I might write an out of the money call at like $2 below the current share price to get a boat ton of premium, lose that capital gains of just selling them. It all depends, because you're like, why don't you just sell them? Well, maybe you aren't too sure that like it's going to go in the direction you want. And like, this sounds like ridiculous because you're like, why not just sell it now for that? There's some times, because of intrinsic and extrinsic value, and because of things like volatility, there is times where you can sell an out of the money call, and that premium will cover the difference between the current share price, where you could have just sold 100 shares and got money, and the current strike price. That happens. That's like a really, really, like, it's rare. But I guess like if I was looking to get out and I was already way above my basis, the stock price had shot up, I might go out of the money and collect more premium. Definitely going to be more premium for out of the money options. I'm trying to like think of like another one that I might like do this with. Another reason is like do that intrinsic value and extrinsic value and getting assigned early. If I know there's a pretty good chance, like this is a non-dividend stock, or I know that the dividend that's getting paid is really, really small, I might sell out of the money knowing that I'm not going to get exercised early. And once again, I'm way above my basis. I'm good to go. So that might be another reason. Like I want to keep the stock. It's not necessarily I want to get out, but I think that maybe there's going to be some news coming out that's going to make it dip, or maybe we're just after earnings, or maybe we're just after ex-dividend where the share price will tend to go down a little bit. I might try and do it there. I mean, I don't know. The last, I think with the call, I might go out of the money if like the share price is like right in between two strikes. Like say it's $20 strike and $21 strike, and it's currently trading for like $20.50. Because of that same reason, I know I'm not going to get exercised early. I might go right below the strike. But it's kind of like at the money though, right? That's not really out of the money. That's kind of like the only times that I'd really, really do it. But in all cases, if I am going to sell these, in the money, I keep saying out of the money. If I'm going to make these in the money, and I'm going to sell these in the money, I'm going to make sure that it's way above my basis, right? That if I get assigned, I'm at least going to make some capital gain on the sale. I'm never going to, this is just a general rule with selling calls. I'm never going to write a call that's lower than the basis that I had. Simple as that. With the put, I'm trying to think where I'd like do this with the put. Maybe, all right, so here's a time where I could think of off the top of my head that I would do this with the put. Let's say I got assigned on a call, right? I'm doing the wheel. So I had a covered call. It got assigned at like $30. So that's my new basis, right? Maybe now I know that I'm going to wait for a red day because I don't want to write a cash secure put on a green day. The premiums are less. So I'm going to wait for a red day. Well, maybe on that red day, it shoots way down. Like I got assigned, it was like $31. So I had to buy them for $100. On the next red day, it shot down to like $22. Right now, now I have that gap up to my basis of $22 up to $30. So I can write the put at like the 22, the new strike. That's fine. Or I can write it in the money at like somewhere in between there, like maybe $25 and get some more premium there. I guess the fact of the matter is you can write in the money calls and puts. But just understand the basis and understand what your risks are. And understand that if it's a dividend stock, you might get assigned early on that call. On the put side, I'm trying to think of like, you're really not going to get exercised early because there's nothing to gain really. They're going to burn extrinsic value. So unless it's really, really close to expiration or somebody really, really wanted to sell off those shares at that strike, I don't know. In the money. Very rarely done, but it can be done. Just make sure that your bases are good. Questions in the chat. Somebody retracted a comment. Damn it. Smash that like. Thank you, Greg. Thank you. Thank you. How do you trade options selling weekly calls and puts at earnings? So what do earnings do? Earnings are going to raise implied volatility generally as we draw up to earnings, right? We're kind of anxious and awaiting the news. So the stock is more volatile. So essentially the premiums are going to climb up before IV crush. So a strategy that people use, I'm not a huge fan because it's a little risky and the timing needs to be just right. If you can kind of find the high just before earnings or through earnings of that, you can write that call at a high premium and then ride the IV crush down and then buy to close later. That would really be the only, I guess, strategy for around earnings. Generally, earnings raise implied volatility, and then days following earnings, implied volatility crushes and constricts, which is going to lower premiums. The good old Ivy crush. Would you recommend doing the wheel or the poor man's covered call on AT&T? I mean, are you asking me? I don't know. I don't want anything to do with them, to be honest. I definitely wouldn't trade the poor man's covered call with them because they trade flatter than a tennis court. I mean, AT&T has been within the same $3 price range, I feel like, for the last 20 years. Let's see. What does Robinhood give us? 5 years? Robinhood gives us 5 years. Let's see what Robinhood is. So, like, right when we sell a poor man's covered call, we think it's going to, like, go up. I don't think it's going to go up. If we look at the last 5 years. 5 years ago, it was the high it's gone in the last 5 years is $42. And then it's trading right now for $27. Okay, so in that range, and it just got its face kicked in. Actually into January, into February, it was trading in the high 38s. So 5 years ago, it was $38.87. And then in February, it was 37. So it doesn't grow. And then with its news and its debt and the fact that it's going to be cutting, it's garbage. I wouldn't even go near it. So, I mean, if you have it, I don't know. I definitely wouldn't. I wouldn't sell. I mean, if anything, I might buy some puts on it. I don't think they're going to go to zero. I don't think they're going to go down that fast. But them and like Wells Fargo in the same, the whole same bucket for me. Just like stocks, I'm not even going near. Would you ever buy a Leaps without doing a poor man's cover call? Happens all the time. Yeah. Every Leaps I buy I do not purchase any Leaps with the intention of writing calls. I mean, that's like technically on paper. I know there's a pretty good chance I'm going to try, but I don't look at both sides. I buy the Leaps because I want the Leaps to be profitable. I've done my research, and the reason I'm buying that Leaps is because I think that Leaps is going to make me money. After I'm in there and I find out that I'm probably right, I'm going to start to look at some calls. But I never write them as one. They never get done as one. Cricket on the Thank you. Jiminy Cricket, thank you. Yeah, please give a thumbs up. AT&T is a waste of buying power. I wasn't going to say that, but I do not disagree. I don't knock people's investments. Like, I'm not, if you own I've owned them. I sold it off. I'm not saying it's bad. Well, I am saying it's bad. I'm not saying you're a bad person if you own it or you're a bad investor. You probably just done your due diligence and you think something's going to happen different than me. We're allowed to have opposing opinion. People ask me all the time, they're like, who the hell who sells these options, these Leaps? Like, you have to understand, every time you buy a Leaps option that you think is going to go up, the counterparty thinks the opposite. Those people exist. For you to buy a Leap, you have to buy it from a seller that thinks that it's going to expire worthless. It blows my mind. Like, when I bought my leaves, I mean, which one do I have? I know there's a little bit of hate with Starbucks. Starbucks has been so profitable for me. I got in at the right time. But like, I think when I got Starbucks, my break even was like 1.5%. So I'm like, coming out of coronavirus, you don't think in 2 years Starbucks is going to be up 1%? I guess value investors don't, right? Value investors think everything's going to crash and tumble. So maybe they know more than me, but there's always somebody on the other side of the coin that thinks the opposite than you. So for me to say there's no way I would buy a Leaps, I'm probably the guy that's selling them. The people like, yeah, maybe that's what I should do. I should sell like a Leaps, go deep in the money, see if I can get somebody to buy a Leaps for me on that. Honest Life, please. I tell my students all the time. Don't be afraid of silly questions. Dumb questions, big, whatever you want to call them. Mute people that don't ask questions don't win. Okay, so you never need to justify yourself to me. Ask away, and if somebody makes fun of you, I'll get my teacher voice in. But Poor Man Cover Call. First and foremost, I've made a couple videos on it. My most popular viewed video, I think it has almost 400,000 views right now, is on the Poor Man's Cover Call. I'm going like this in the picture. So look for that one and watch it. But it means that you have a Leaps and you sell covered call on the stock. No, I sell covered calls using the Leaps as collateral, not the stocks. And if I get a sign and then go back to my channel as well, that question came up. What happens when Leaps get assigned? I did a video on it last week. It's 4 minutes. Check that out, and you should be all set up. At this rate, you're going to have to split the AdSense money when you get monetized with Brian and Barry. Yeah, this live stream is not going to be monetized for a very, very long time. I think there's a better shot of me getting to 100,000 subscribers before this becomes monetized. Yeah. 4,000 hours of watch time is a lot. To give you some perspective on that for all the non-YouTubers out there, this is I think the 8th week we've done this in a row. And there was like 1 or 2 times where I did it twice. Let's just say we've done 10 episodes of this. As of this morning, I had 1,200 hours of watch time. Last week was my biggest one. Last one was my biggest one. I've had many YouTube advisors and finished chairman of the board. Oh man, I don't want to be the boss. I don't want to be in charge. I like to just sit back and be shy, I guess. People at FinCom are like, man, you're pretty quiet actually. I'm like, yeah, if I don't have something to say. I am pretty introverted and shy. Got signed on 2 cash secure puts, but the stock keeps going down. Should I keep selling puts deep in the money in order to lower my cost basis? Great option. We talked about that earlier in this episode. That is one thing to do. And then get a sign on it and convert it at the money, or just get rid of the stock. It really depends. My biggest bag hold ever was Wells Fargo, and I got crushed on a cash secure put. Crushed. Like 30%, 20%. And I risked it, and I sold calls below my basis. I just monitored them a lot more. And eventually, over like 6 months' time, I earned enough premium back to get to break even, and then I sold it off. But bag holding sucks. Something you just got to know, right? It's one of our outcomes. It might keep going down, but like you mentioned, you can lower your cost basis by selling more. You can lower your cost basis by just buying a couple shares here and there, and then hoping for a green day, and then maybe get some out, start trimming some losses, and get back to a cost basis. But to me, I wouldn't advise it, but what I did when I was bag holding, there wasn't even any volume at the strike that I got assigned at. So I was like, do I just sit here? I think I was selling deltas of like 0.1 and just getting like $2 to $5 at a time every week. It was brutal. And Took time, but I broke even on Wells Fargo, those sons of bitches, and I got the hell out of there. So I'm getting crushed on BBIG. I'm not sure what that is. I'm trying to get rid of the stock with covered call above my basis. My cost basis. Yeah, that happens. That's kind of like what we just talked about. Let's keep this ball rolling. Son of a bitch. Guys, I got bad news. It's not bad for you. It's bad for me. I never pressed record. I'm not recording this. That sucks. And the worst part is when I click to go live, OBS automatically starts recording it. And tonight I was like, I'm not going to press. I unrecorded because I didn't want that first 15 minutes. Shit. I'm such an asshole. I'm such an asshole. Oh, God. You want to see a look of disappointment? I wish I could verbally explain to you how mad I am myself right now. Yeah. Yikes. Well, let's make it feel. Let's make it better. Let's play a voicemail. Fuck.
Hey, what's up, Brad? Just wondering how you use gamma when you're selling options in the wheel strategy. I've noticed that as I get closer to expiration date, the gamma is increasing, but I don't know what you would consider a high gamma or a low gamma, and just how you use gamma in your short puts and short calls.
Awesome question. If this makes it to a clip, I'm gonna leave the video for my Greeks. The video on the Greeks, probably my third most viewed video. Options Greeks. So first and foremost, I'll say, like, when I'm doing the wheel and stuff, I don't really care that much about any of the Greeks. I mean, theta's pretty much at 0. Delta I'll look at to kind of see my probability. Gamma and Vega, I'm not too worried about, like, volatility because theta is so small with Vega. And gamma. So what is gamma actually going to do for us? Here's how I think of it. And guys, I'm not going to give textbook definitions of these Greeks because when I read textbooks, I don't know what they mean. I'm going to give you practical applications. So we have gamma and delta play together. They're kind of like, I guess, cousins. I don't even know. But like, they play together. So delta, the technical I'm not going to tell you the technical definitions, but let me tell you the technical definition is essentially how much the value of the option is going to increase or decrease with a $1 increase or decrease with the share price. So for example, if you have a delta of 0.9, right, and the share price goes up $1, the value of that option will go up 90 cents, which is why we use it in a practical sense as a kind of a representation of how many shares we own, right? Because if you had a delta of 1, which you know, like 99 would be, I guess, the highest you can really go. If you had a delta of 1 and the share price went up $1, how much did you just make? You made $100. The same as if you owned the shares and it went up $1. So that's kind of how we use it. That's the one, like, practical thing we think about delta. The other thing that we kind of rule or thumb or generalize with delta is the probability that that option is going to be in the money at expiration. So favorable to the buyer. So at the money, deltas are generally about 0.5, right? Because you got about 50-50 chance that's going to go in the money or out of the money when you're at the money. The deeper and the further you go away from the share price, the less likely the buyer is to succeed, which is why in leaps, right? When we sell a leaps, we go down as the buyer of the option and we sell at 0.9. That gives us a 90% chance, roughly, that that option is going to expire in the money, right? And when we write calls and we write things against poor man cover calls, we go with a delta of, say, 0.2, because that means that the buyer has a 20% chance. So that gives us an 80% chance of success. So to understand delta, that's kind of what you have to understand. We're thinking the probability that is going to end in the money at expiration. Now, so how the hell does gamma play into that BS? Gamma is like the stability factor. So gamma is given as a percentage, and it tells you how much that delta is going to change with the $1 share price. Okay? So these Greeks are always ebbing and flowing. They're always up and down. They're not static. They're not fixed. So as we go closer to the money, away from the money, all of these Greeks, they start to change. So when I'm at the money, Vega is going to be, not Vega. When I'm at the money, gamma is going to be pretty high. As I go further away, gamma is going to be really, really low. It's more stable. When you buy a leaps, that 0.9 is going to stay there. It doesn't fluctuate. It doesn't jump all over the place. So you ask, like, what's a high gamma? Just like a lot of the Greeks that we can look at, it's all kind of, you have to compare them. It's all relative. So for example, if I looked at two options and both of them had a delta of 0.2, right? But one had a higher gamma, there's more risk with the higher gamma, right? There's more because that swing, that probability that it's going to expire in the money changes quicker with a $1 share price. So when we have a high gamma, here's how you can look at it. If the share price were to go in an unfavorable direction, right, the value of your option is going to go away quicker. It's good. It's more volatile. Okay. Now the volatility side over there with Vega and Vega exposure, I guess you can kind of look at both of them. But to answer your question and not babble on, you really have to think of it as a stability factor. If delta is the probability that it's going to be in the money at expiration, gamma is the stability of that probability over time. So the lower the delta, the lower the gamma, the more likely that delta is going to stay pretty fixed. It's not as risky. The higher that gamma goes as you approach the share price and the strike price, as you approach the money, that gamma is going to increase, and that's going to make delta swing a lot more with the same exact $1 movement as compared to another stock with the same exact delta and a smaller gamma. If you're trading the wheel, you could not even think about gamma, if I'm being honest. If you're trading the wheel, most of them don't matter. If you're going to trade the wheel, you understand theta, but we're so close to expiration where theta is not really going to do that much, right? If you're doing the wheel and you're doing weeklies, like theta's already done most of its job. It's going to trickle down and get rid of extrinsic value for a little bit. So if you're doing the wheel, you kind of get theta. You don't care about Vega necessarily. And like I said, I don't think you should really necessarily even care about gamma. And you can look at delta as just your probability if you're writing calls and puts. You kind of decide, like, I'm new to this. I kind of want to try a couple. Then you're going to write at a delta of like 0.2. Give yourself an 80% chance it's going to expire out of the money, right? Because with a delta of 0.2, that means the buyer has roughly a 20% chance it's going to expire in the money, right? So you're the opposite as the writer of that option. Same thing with the cash secure put. You kind of have the collateral. You don't necessarily want to get assigned. You're going to write a small delta because a small delta is a small probability of success for the buyer. You are the seller when you're writing cash secure puts and calls. So you want a higher percentage opposite of the probability going in your favor. Thanks a lot for the gamma question. Dylan, thanks. Yeah, I can download the video from YouTube. It's going to be not great quality. I think it's like, I don't know what it is. But it takes, especially live streams that are this long, it takes like almost 3 days for them to process. So I can't download it till it finally processes. It's just going to be a pain in the butt. I'm not going to lose them. It's just going to be, questions. And then we got some more voicemails. Dividends coming October 15th. I think stock's going to drop some. Well, dividends drop the stock by the dividend amount. So it's definitely all stocks drop on their dividend payout date. We think about using margin as collateral and leaving the cash in the high. I'm not a huge margin guy, but I've used it. I have margin on the ready. We have people have been asking hey, there was a 4% drop the other day. Did you use margin? Nah. If we go to 20, oh my God, I am going to be filled to the gills of margin. I'm going to go against and be the biggest hypocrite ever. Tomorrow, the S&P 500 drops 25%. I'm going 50K into margin. I don't know if that's 100% true. Don't quote me on that. But damn, I got some margin on the ready, especially in M1 Finance and in Robinhood, I guess. But I've used margin to write puts. I can't say I haven't. Can't say I won't again. I just don't advise it. Do as I say, not as I do. Charles got a quick voicemail. Here we go. 30 seconds.
Hey, Brad, like the weekly show. I just got assigned and now I want to write a secured covered put to keep the wheel cycle going. I've set an expiration date for 7 days from now. But there's a catch. Before the 7 days are up, the stock will go through an EX date, 2 days into the trade. I know a covered call in the same situation will usually be assigned, but what about the put? There's nothing to be assigned. What happens if anything? Thanks, Charlie.
The only thing you really got to worry about, Charlie, is that from my experience, the share price usually comes down a little bit, but for the day, it usually averages out pretty quick. Like I just mentioned in the chat here, it's definitely going to go down by at least the dividend amount, but that usually happens. Yeah, that happens at the ex-dividend date. So definitely more to think about the ex-dividend date on the call side than the put side. The only real thing that I would think that you really have to worry about or think about is if you think that people are getting into that stock because this happens with stocks that have a really, really high dividend. What's the strategy called? Is it dividend capture or something like that, where people go in and right before the ex-dividend date, they'll buy a bunch of shares, get the dividend, and then get the heck out the next day or so. That happens with a lot of big stocks. And what that does, with big dividends, like these sketchy ones, these seedy ones that have 10, 12% dividends. I've never done that dividend capture, but I know people do. And in that case, right, you might have a little bit of pump, so the share price might go up. Then after all those dividend capture people get their dividend, you might see a dip back down, which kind of could reflect or give kind of an inaccurate view of what the current share price is and what the strike price should be. But I don't think you really have too much to worry about. I really wouldn't think about it. Who's Brad? Facts. Who the hell is Brad? These days, I don't know. Mon, you still in here? Thank you for leaving a voicemail. I'm going to play it for you. Hope you're still here. If not, I started recording, so maybe this will be a clip. 34 seconds.
Hello, Brad. Thank you for taking my call. My name is Marlon. I'm a new subscriber. So forgive me if this question has been asked before, but I just started experimenting with the poor man's cover call, and I have a question. What if, instead of buying a deep in the money leaps with an S, I buy one at the money leaps? Can I still sell cover calls on it? Thank you for your answer.
So you watch the videos, you know my pet peeve where he said leaps with the S. Oh my gosh. The amount of YouTubers that have blocked me for just asking in their comment section, isn't S part of the acronym? So we discussed this a little bit on the channel or in the live stream tonight. You can put the leaps wherever you want, right? The poor man's covered call and a leaps option, the only requirement for leaps generally is that it's far out in expiration. The whole deep in the money part doesn't make it a leaps option. It just protects us and helps us when we go through the poor man's covered call strategy. So you can buy a leaps option wherever the hell you want, in the money, out of the money, at the money, doesn't matter. When you're selling calls against it, though, you are putting yourself at risk to lose a ton of money. That's all I'm saying. I understand that there's probably some people that can make some money off of it. But if you're going to buy out of the money just because you want a leaps option out of the money, you think it's going to go up. You're really, really bullish on it. Don't buy, in my opinion, don't buy a leaps option thinking that you're going to do the poor man's covered call. I've only been doing it for about a year now, and the 500 people that are in the Discord and the come and gone, and probably the 1,500 people total that have been in the Discord in its lifetime, I've never seen somebody have success with that. Ever. Now, granted, like I said, my sample size is small, but I've never seen anybody successful with that method. And you didn't mention it, but I'm fearful that your reasoning for that is to save money on the premium on the leaps. Right? So many times we don't want to follow the rules per se and go deep in the money because we can't afford it, or we don't want to go far out in expiration because I can't afford it. Just save up more money, man. Simple as that. It sucks. The FOMO is real. If you're in the Discord and you see people doing stuff, you're like, oh man, instead of a delta of 0.75, I'll just do it at 0.5. Go for it. But don't expect the same results as the people that saved up the money, that did the research, and were able to purchase it for more than 1 year out and at a delta of greater than 0.75. The same advice I'd give to you. If you want to sell an out of the money leaps, if you want to buy an out of the money leaps and sell calls against it, I give you my blessing. But I'm going to advise you, not as a financial advisor, as a person that has read and seen it. I will advise anybody, including myself. I can't use that word advise. I'm going to report to you that your probability of success is almost going to be 0. Almost. And would I love for you to get in the Discord a year from now and tell me how you did it and you made $1 million? Absolutely. I would love to hear that, and I will clap for you just like I clap for people that crushed and became millionaires on AMC when they told me to do it, and I said, not a shot, I'm touching that. I will fail due to omission, not commission. I will stand on the sidelines and see other people win using strategies that I personally do not believe in or will do myself because I want people to win. It sucks when you advise against it. What would be really crappy is if you did it and got back in the Discord and were like, man, way back on October 4th, I probably should have listened to you. I lost $750. That's just damn it. Why wasn't I more forceful? Why didn't I reach through and say, don't you effing do that? I don't know. If anybody in the chat has ever bought an out of the money call option, leaps, and was successful selling calls against it over the long term of that option, I would love to hear about it. I'd love to hear about it. Let me know. Is there anybody that's in here that's actually not in my Discord? I'm just curious. I'm just curious how far this reaches out. I know I have probably some people on the main channel, but have come over, but I'm just curious, what percentage of people are. Give a 1 just type a 1 in the chat if you are a member of the Discord. And write a 2 if you're thinking about it. A neutron walked into a bar and asked, how much for a gin and tonic? The bartender smiled and said, for you, no charge. I love it. Luciano, I actually tell that joke a little bit different in class. I tell the joke, a proton, a neutron, and an electron go into a bar. Bartender says, hey, proton, what can I get you? He said, I'm going to have a Heineken. He says, $4.50, please. Then the electron says, ooh, Heineken. I do love Heinekens. I'll have one of those as well. Bartender says, thank you, $4.50. And the neutron says, well, if everybody else is going to be having Heinekens, I'm going to have a Heineken as well. And he said, yeah, but there is one different for you, neutron. For you, no charge. I tell that one. My favorite one though, not really physics, it's more chem, but I guess chem is physics. My favorite joke to get their attention is Gold walks into a bar and the bartender says, "Hey you, get out of here." Only the nerds will get that one. Ones and twos. You're thinking about it. Hey, all you ones, tell the twos, is it worth it? I don't know. Is it worth it? Is it worth it? Is it worth it? I don't. Is it worth it? Will you make it $15 back? I don't know. Maybe. Discord's a good time. Especially now that I just added in leveling and ranks, just to tickle on some people, all the competitive people in there, including myself. I'm going to be up tonight all along, like waiting for it to be like, "Congratulations, Brad, you are now level 4. Screw the 15, go all in, buy the year. Yeah, I think the year gets you 2 months free, I think. 2 months free. I was against the year for a while. I never wanted anybody to feel trapped. Like, I didn't want somebody to get the year and then be like 6 months in, be like, "Oh, this is stupid." But that's why I just did a Google. Oh, thank you very much. You can now comment in the chat in 1 minute. That's why I did things like I added the Google form. I got some really awesome feedback. I've been asking people for bots. You can see we got a couple bots in there. Just trying to make it just a little bit better, a little more entertaining, and also trying to add value. I was so against like the technical analysis and day trading, and I'm like, that's not me. And then my community was like, well, we still want to learn from each other. Like, you brought us together. Can we learn from each other? So now, like, that whole like day trading, technical analysis, and charting, and all these things. Like, we even got good old what was his name, Zach, in there that called me Brian last week. He even jumped in and has been teaching people about all his fractals and stuff, just blowing people's minds. It's been awesome. So definitely now I'm a lot more comfortable. That rant was, I'm a lot more comfortable doing the year option now because I know that we're going to be continuing to grow it. And I can't believe it's over a year old now. That's freaking unbelievable, you know? And also too, I realize that I have a lot more value to give. If I can be honest, well, I guess I'm always honest. But if I can give full disclosure, there will become a time where this live stream is open to only the Discord members. I don't know when that's going to be. It's going to be a long time from now. It'll probably be like whenever the chat gets so big. Like right now, there's 35, 40 people in here usually. If I happen to get big enough where it grows to like 100 people and I feel like I can't give proper attention to my Discord members, I'm just going to leave it to Discord, and then I'll post it after the fact. Like, I'll always make them public, but I think for the chat option, one day that's just going to become a Discord thing. I don't know when that's going to be. Probably 6 months or so. We'll see. Maybe when I get to 100,000 subscribers. Can you tell I want the 100K? I want that freaking play button right there. That's all. Send me the play button. Does anybody have 9,000 friends? They can unsubscribe in 6 months. Actually, no, I think it takes like a month for them to like contact you and get to play. Anybody got 9,000 friends? My buddy JJ's got 156,000 friends. Listen, I didn't say you couldn't buy a new car, Robin. I just said I would advise against it. If I was a certified financial advisor, I'm never going to buy a new car again. That's a complete lie. I'm going to buy a Tesla one day. Greg, question. Awesome. What's up? Poor man's cover call. Popular topic. Does anybody want to know about index funds? Anybody want to know VTI? See, this is the thing. We could talk about poor man's covered call all day, but if I talk about getting out of debt, people don't want that. They don't want that. That was a problem on my YouTube channel for 3 years, right? A year ago now, I had 10,000 subscribers, 8,000 subscribers. And then I stopped talking about things people hate. Like, I might as well for 4 years have made a channel about why people should go vegan. And like said to myself the whole time, like, but I'm really helping people. I'm really helping them. I know it's not the most popular, trending, clicky topics, but I think I can make the world a better place if I make more vegans. That's what I did. with my channel. For 3 years, I was like, I just want to get people out of debt. Just get out of debt, save for retirement, make a sinking fund. We'll invest later. Nobody wanted that. What do you mean I can't buy a car? What do you mean I can't go on vacation? Jerk. Unsubscribe, dislike. Then I was like, oh, maybe I'll make a video about how people can make stupid money even if they make stupid decisions with money before that. And then the channel blew up. JJ's like, you gotta change the banner of your YouTube channel to options. And like, hey. So now you do whatever you want with your money. You want debt? Debt it up. Debt it up. All right, Greg, back to your question. My bad. Sorry for the rant. I haven't held leaps nearly as long as you have. When called on the covered call and can't roll up or out anymore, is there any difference in selling for a loss without selling the leaps? There's a lot of buys and sells in there. I just want to make sure that we're right here. So you bought the leaps when called on the covered call. I assume that means when you're assigned on the covered call and you can't roll up and, well, if you've already been assigned, you can't roll up and out anymore. Is there any difference between selling the covered call for a loss? The covered call you'd buy to close that you wouldn't sell. Like I said, there's too many buys and sells there. Please rephrase your question. You buy the leaps and then you sell the call, and to close the short call you buy to close, and to sell the long call you to close the long call you sell to close. Yikes. You already did that here without being prompted. Please buy Lucent, said Tesla. No trains, planes, or automobiles for this guy. Can you make a living off of selling options? Yes, it's going to be a tough living, though. I much prefer to live off dividends and live off index funds and trade options as sport. Like, I don't know how many people are into sports. I'm not knocking sports. I'm a collegiate athlete, former collegiate athlete with 1 year of eligibility left, so don't mess with me. If, like, right now the Yankees like got this big walk-off. I'm a huge Met fan, whatever. I know the Mets roll over and die and the Yankees fight till the bitter end. If you saw my tweet, you know. I get it. But, like, all the people that are texting me so pumped, so freaking jacked that the Yankees won, like, I don't have time for that, you know. And it's the same, like, I don't have time to like just sell options all the time. Like, that's my fun. Options are my sport. Instead of watching baseball and like cheering when the Yankees hit a walk-off to go to the playoffs, options is what I cheer for. When there's a $1 increase in the share price and my intrinsic value goes up by $1, that's what I cheer for. But I'm not trying to make a living off of that, just like people aren't trying to like buy the Mets, you know? I mean, I guess if you're Gary Vee, you're trying to buy sports teams, but the only reason that I'm trading options is for sport and hobby. In no way, shape, or form do I want to try and make a living off of it. Like, I look at these technical analysis guys in the Discord and all the time they're putting in. I'm like, look, this is really awesome, and I'm a super like nerdy tech, love charts kind of guy, but I can't put this effort in. I just don't have it in me. You know, and it's also starting part of the reason why I'm starting to like kind of like get away from the whole real estate craze. I'm realizing that all these people that want to get into real estate are much younger than me. Like, did I miss the boat? Like, am I going to buy all this real estate so I can see the fruits of my labor when I'm in my 60s? Or somebody like JJ that wants to buy all this real estate, you know, he's trying to live off that real estate when he's the age that I am now. So I'm like, why don't I just get like $2 million in VTSAX and just kick it? I don't know. A lot that goes through my head. The YouTube channel makes it harder because I see everything. I really do. I see all these things and I want to do them. Sorry, too many beers. Yeah, Greg, try again. And leave it as a voicemail, please. I linked the link. Just leave it as a voicemail. Please, please. I need 3.3 million at risk to be able to live off trade options. Where can you get there? Hey. Yeah, no, people do it. People do it. All right, guys, you got any last minute questions here? What is it, 9:50? Shoot, I gotta go to Sheesh. Thank you so much, guys. On your way out, if you want to leave a thumbs up, that'd be dope. Please leave a voicemail. I like that we got a bunch. I don't mind being on here for a bit. Gives me some content. If you're thinking about Discord, jump in the Discord. You got all the discounts to the option courses in there and things like that. Pretty much, if you go on the Discord, you don't need to pay for the options course. Yikes. Ice my veins. Sheesh. Yeah, I know. I wish I could. I need some NyQuil. I'm fading. Real estate cash flows, and on top of the 7 years, all you need all the principal paid out. I know. I'm definitely going to be in. You find a real estate deal, I'll get in. I want it. Thank you. I love beer donations. You can send them anytime. Send them anytime. 1 South Chicago Avenue, Bayshore, New York, 11706. Care of Brad Finn. That's the brewery's. That's the brewery's website. Brewery's address. That's where I have everything. New York Giants. Did they finally win? Did the Giants finally win? I couldn't care less about sports. I watch sport. People always like, you say you don't care about sports, but you watch sports. I watch sports because I need an excuse to drink. If I'm just sitting around drinking on a Sunday, I look like a degenerate. But if you're sitting around drinking on a Sunday watching football, you're one of the boys. Let's end it on that, guys. Enjoy the rest of your evening. Thank you so much. We'll at least see you back next Sunday. Actually, no. It's going to be next Sunday because I have a booked out week. Wish me luck with Jaspreet, the Minority Mindset. Huge episode. Probably one of the biggest guests that Average Money will have on for a very long time. And then I'm going on Bigger Pockets on Wednesday. I hope my voice gets better. Trying to get my good, get rid of this cold before I'm on Bigger Pockets. But don't tell anybody that I'm just a regular jerk off. Just a regular jackwagon. Who said that before? Instead of jackwagons on YouTube. That's me. Brian Fad. Jackwagon.